Hey, good morning, YouTube. This is TerrenceRe. Got your stock market news update today. So I got some notes or some things I want to go over. So let's get right to it. What you're looking at on your screen right now is the S&P 500. Actually, this is the SPX, and this is showing you basically on the day. We're up about 5 handles on the future. So when I say a handle, I'm automatically talking about futures. And the reason why I do that is, the futures run overnight. So it's going to give you, even if the stock market isn't open, how the market's how it's going to open by the futures market, pretty much lead everything. So, right now the S&P 500 is up 5 handles. Now the NASDAQ is up 66 handles. The Dow up about, it's down 99, and that's mainly because of Disney. I'm gonna get to that. The Russell is up 15 handles, which all of these moves are relatively small. Basically we have a flat day right now for the most part. Even though you see a lot of green, it's not. If you look at if we go to the advanced decline line of the S&P 500. Right over here, you can see that there are 50. So basically out of the S&P 100, the top 100 stocks in the S&P 500, 57 or 58 you see right here are advancing, and 43 are declining. It's actually showing 101. And I believe that's because of Google. Google is on here twice. You got GOOG and GOOGL, right? And if you look right here where the big red bar is, that you see right here, that's Disney. And Disney is down almost, looks like right around 8% so far on the day. And that's what you're looking at right here. Matter of fact, it's down 8.35% at this current moment. And it's Disney disappointed on their earnings. And so, I could go ahead and pull up the Disney chart. I did want to talk about Disney a little bit. I don't really get into it. If we want to, you can see right here what it looks like. I like to look at the charts. If I didn't know that the earnings were yesterday and I just came and I'm gonna pull this out some and just look at this chart and seeing it down, I'd know that was news. Just looking at the chart, it'll tell me that it's news. If we pulled it up and I could pull up the news and then go read it. But for the most part, I don't really think it's important to know why. It's just the fact that I know that it happened and I'm looking at it. So looking at this chart right away. So if you're someone that's in Disney, you're down right now. If you're looking at this and you're saying, this is a daily chart, a 3-year daily chart, and you're saying, well, this might be a good buying opportunity, right? I'm not saying for me personally, I'm just saying that, you want to buy when it's down. So where would you look to get in? If you look at the bottom of this chart, I have the RSI. This is the relative strength index. And a lot of times what will happen is if someone wants to, if you're using this like I do, you want to, when it's oversold, you see right here, when it gets below this line, below 30, and you see how it corresponds right here, in my opinion, that's the best time to buy dips, if you're going to buy them. On this particular instance, if you'd have bought right here, right around the 167 level, that doesn't mean that it can't go down further. It can, but you bought here and then it popped up, you held all the way up to what, 185 or something like that. And so if we're looking at that, and I also like to look left. So I'm looking at this candlestick and then I look left, right? We got a gap right here. So I automatically know that somewhere in here, from where it gapped up before, you're in a range where people are looking to buy Disney. You will see people come. You will see. We'll move it up about right there. Move this down some. You're going to see people come in. I wouldn't be surprised to see a quick pop like maybe not today, maybe tomorrow, but it could also go through this. I'm gonna show that in Tesla. I'm gonna look up Tesla next. So what's another level? If it's not there, you can see, look, let's look left again where it popped up, pulled back. You got like a little bull flag right here. And so another level would be somewhere in here, which I'm gonna show you I like to buy it where the gaps are. I probably wouldn't use this level. This would be the next level for me. So Disney most definitely could fall more right here where the next gap is. If I was buying Disney, which I don't necessarily, I don't love the stock like that. I'm not a big proponent of it. I've never been. So, you know, maybe if I had been, then I may feel different about it. But so these would be my two levels. So this may not be a bad level to, if you wanted to sell puts to get long, maybe like an option play, or you could buy maybe I wouldn't, the IV rank is 24. So it doesn't have expanded, the IV has not expanded a whole lot on Disney. So it's almost like they don't have a lot of vol baked into the option market. So, which would lead me to believe that it could possibly fall some more. It's not almost like it's not a big deal, like it was expected. So like I said, I would look for, if today isn't a bad opportunity, it's not a bad place to buy. You come in and maybe put on half your position here. My next spot would be somewhere down in here, right around the let's call it, I don't know, 135 range, right? Maybe 135. You could look to get in if you want to try and get long Disney. That's that. I wanted to take a look at Tesla, because more on that same, I already got it marked up, right? I'm gonna take my fib retracement off, because let's just look at it like this. As you can see, I put this level here. I actually did this while it was going down. I got a video, and I'll probably link it to this video where I did analysis as Tesla was coming down right here. And I put this as a support level, right? And so you can see it came and popped. You got a little up move, and now it's back into this level right here. So we could see it use this as support and continue to go up, go back up, or excuse me, it could come down, and then this is the next level. Now, honestly, this is the level that I'm looking for. I'll probably come on and do like maybe a debit. If it gets down to here again, I'll probably do something like a debit spread, right? Come in on the call side, maybe do an out spread. Come down here. Let's see. This is the monthly. I would do something like come here, you know, buy one in the money, sell one out. Let's see what that would look like. If we did it today, let's just see what it would look like. You could do it for 238 bucks, 235. You can see it moving around. Just lock it in. We'll lock it in at 235, right? If you got in, let's just say you did the mid price, because you may not get in right there. Let's say you had to work the order and got in at 250, because it's a $5 wide spread. You don't want to pay any more. I don't like to pay more than like 250, maybe 260, because then that means your profit is two, like if you pay 250, you can make 250 on a $5 wide spread. So, and that's how I generally like to play those buying dips for me. You know, I don't take a lot of risk in that fashion, like you coming in stepping in front of the train when you do that. So on either side, whether you shorting or getting long. So that's that with Tesla. Like I said, be on the lookout for it's down. Well, actually it's up about $4 today, which really ain't nothing. You know, $4 in Tesla, you might as well call it flat, right? It's gonna, I think it'll hang around this area. Like I said, I'm looking at this area to put a trade on. I wanted to talk about gold and oil futures, because if you're watching the news, you're probably gonna see all over they're talking about inflation, 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 inflation. So I'm gonna put up gold futures. And for me, how I was taught to track, like if you want to track, or how I've learned to track inflation, it's just by looking at gold and look at oil futures, right? And you may say, well, why? Because when oil is up, what gas is up, and the average American gas prices are going to affect the average American. Maybe not everybody, you know. If you're rich, you don't care about inflation either way for the most part. And most people don't have EVs yet, but so oil futures will pretty much track energy. And oil is up. Let's look at the oil chart. This is /CL, and these are oil futures. And you see this kind of looks like a megaphone right here. You got an expanded megaphone. You see right here. Now I actually have like an indicator that draws these trend lines for me. If I was drawing it myself, I would come from this top, and then I would try to make it touch, like from the top of this wick to this wick to that candlestick, and I would do it the same way. And so you can see that oil has been going up. Same thing. That may not be as great an indicator as gold futures. Now, if you look at the gold futures, now at the same time, futures, this isn't like futures aren't really traded by retail traders. There are retail traders that trade them, right? I may sometimes scalp in the futures market, but for the most part, retail isn't holding large positions in futures and in these futures. So if you see the futures market moving, that's institutional traders. That's hedge funds. That's banks. That's who comes in here, and you see how gold has broken out. And I mean, like, broken out ever, like 1, 2, 3, 4, 5, 6. The last 6 days just booming out of this little consolidation area, right? So if looking at this, I'm looking at it to take out this high at some point. And then you got another high way back here. So that's showing you right there how institutional traders are looking at this, and they're buying gold. Like, they're literally buying gold futures. You're buying gold futures because you want to, for the most part, you're hedging. This is an inflation hedge. You're looking at it. So I don't care what they're saying. That's why I said I can look at the chart. They can say whatever they want on CNBC or Fox News. They can tell you, Jerome Powell can come on and tell you inflation is transitory. The charts and the trade is not telling you that. Institutional traders do not believe it's transitory, or if they do, maybe they think it is in the short term, but they're buying gold futures to hedge their portfolio. So you can actually see this on the chart, right? So you may say, well, how can we get involved? There are ways for, if this is too large for you, you can come in here, GLD. GLD is like a gold it's an ETF that pretty much tracks gold. You see, it looks the same. Chart looks similar. So you could come in here and you can trade the gold ETF. You can trade this GLD, right? Oil has an ETF, USO, but I don't really like it. As you can see, it doesn't move the same way as oil does. I don't really like the ETF. I would really stay away from there. USO is kind of tricky to trade. It has some different characteristics about it, so I would pretty much stay away from it. If you can trade the oil futures. Now you can trade them in the options and make them smaller, by spreads and things of that nature. But if you let's take a look at XLE, which is the energy. This is a more liquid. Um, this is the energy ETF, and it pretty much will move it'll move similar to oil, and it's more liquid. And as far as like a trading vehicle, I like it much better than USO. So this is one way to kind of track, oil or track energy in particular. And so those are the things I like to look at the gold. And I think I do have a long-term portfolio with Fidelity that I manage, and I own gold in it. I actually, instead of owning GLD, I own GOLD, right? This is Barrick Gold, and you can see it gapped up here. And I've been in it since it was like down here. So I own, and this is a cheaper way to play it. It's a $20 stock. I'm gonna hold it. I do believe that I don't think that this inflation is transitory. I just think that we've done so much, and we want to keep an eye out on what the president is going to do with the Fed chair. Are they going to replace Jerome Powell? The Democrats, the progressives, want Joe Biden to replace Jerome Powell, and I really don't know. I don't know if that's a good. I don't know if it's a good idea or a bad idea. A lot of people think that he did pretty good with the pandemic and keeping the markets from falling. And so in this, in the United States of America, it's all about the stock market. So whether you agree with that or not, that may not be a representation of what's going on in the everyday household, because I think the last statistic I heard is like half of American citizens don't own stocks. So, but unfortunately, when they talk about our economy, they relate it directly to the stock market. So, and many people think that he did a pretty good job, but progressives are really pressuring the president of the United States to swap Jerome Powell out. And Jerome Powell, I don't know if people remember early in the Donald Trump presidency, the Fed raised interest rates and the market took a quick little nasty downturn, and then they quickly backed off of it. So progressives want the president to put a Fed chair in that will basically raise interest rates and slow down the market. That in essence, that's what they want. They want to curb what they would term like runaway inflation, which I don't think is runaway yet. And I don't know what'll happen with the market if once they do start raising rates. So that's the next thing to really pay attention to, as far as if the market's we're gonna see a downturn in the future. But one of the things you want to do is keep an eye out on gold. Watch gold. You see institutions. Let's look at it on a weekly. So right now, when I got it pulled up, I do want to show you on the weekly. Each one of these candlesticks is a daily. Like, see, each candlestick represents a day. When I go to the weekly, it looks even cleaner. So each candlestick is a week. Look at this. You see this line right here, and you see it breaking out over that line. That's a breakout. And you can see on the RSI, it breaking out. Right? So generally, like when you see it pop above the 50, that's what this dotted line is. This is like midway of the RSI. But, if you're not real big on technical analysis, that's cool. You can just put this at the bottom, and, basically it's self-explanatory. It's overbought, which that doesn't mean it can't still go up, but for the most part, it's overbought when it's up here and oversold when it's down here. And right around this range, when it's crossing over the 50, that's when you want to be, placing your trades, because you're in the middle of the range. If you're right, you're going to make, a little money, but you'll know right away when you're wrong. But you can see on the weekly, it's breaking out. So that's why I think that inflation is here to stay, and I ain't the only one. Not just looking at the chart. The charts don't. You can see, like, people can say what they want on TV. Well, you can pull this up and then you can look at it and say, hey, according to this, a lot of people are buying gold. And why are you buying gold? I mean, literally, you buying gold as a hedge, an inflation hedge, and that's, for the most part, that's what it is. And so, or just speculation. You could be speculating, but I think a lot more people now are speculating with Bitcoin than they are with gold, because Bitcoin is so volatile and it moves. It's really easy to make a little money. You just buy it and hold it. When it pops, you make some money if you close out the trade. Excuse me. And so, I'm not gonna keep I don't want to make this video long. I don't want to be long. I just wanted to be strong. Come through with a little update. I think today is going to be just looking at it, a flat day. I don't think we're going to get a whole lot out of the day. May get a little sideways action. Who knows? If this is the SPX again, if this candlestick closes within the body of this one, that's what you would call like a harami. That's a harami. Basically, the next day after this would be where you get your big move. If it stays like this, because then you'll get your big move up or down. I don't really know. And you can see I'm looking. I wanted to go down. I got a short call spread. I sold up here. I got basically, like a doji candle. You got like two of them next to one another. So right then and there, I'm looking at, once I see the market start to go down, I want to sell. And so that's how I use technical analysis to place trades. And so hopefully you guys got something out of this video. You liked it. Hit the like button, subscribe, share the video, and put stocks in the comment section that you want me to, like, if it's a stock that you want me to pull up and chart up, I'll do it. If you put it in there, I may do it later on tonight, and I'll post a video what I think, looking at the chart. Post some video ideas that you want to see me do. And with that, I'm out. Peace.